Welcome back, guys and girls, for this week's weekly Forex Outlook. Now, let's dive right in, shall we? So there's a lot to talk about. However, instead of going into and just bore you with the fundamentals, not that it would be boring, but if you're starting out and you're not familiar with those things yet, then it can become a bit overwhelming. So yes, we have fundamentals. Yes, there's the FOMC meeting this week, and again, there's no way to know if they'll raise the dot plot, if the dollar will strengthen or not. So instead of focusing on the fundamental side as we did for the last couple of weeks, let's do a bit of a more technical side of things. And I want to give you a really quick rundown on how I go through the pairs when I do my weekly analysis, and basically this doesn't include any fundamentals and how I identify these opportunities. So this is purely technical, and so I usually start out with the US dollar index, and I'll usually have a bias for it, right? So the way it happens is you start from the weekly and you go from the higher time frame to the lower one. So I start from the weekly and I look whether we have still the trend line, whether we have resistance, and all of these things are in place. Now, based on that, there's really three ways we can have a bias. It's either we have a bullish bias, which means that pair or a currency index is going up. We have a bearish one, which means it's selling off, or we have sideways action. And then you have sort of the middle ground, which is a bit more advanced. But the point is, for this case and instance, we can safely say that this is a ranging market. This has been a range for the last couple of weeks, and it is a ranging, to give you a more advanced overview of it, it is a ranging market with a bullish bias. And why do I say bullish? Because we have a trend line that has not been broken. We have higher lows as we've come into this range. So if you're coming into a range from higher lows, it means you have a range from a bullish bias. If it would be lower highs and then a range, we would have a range with bearish bias. So bullish bias with a range on the dollar index. And so that's, as I said, that's how I'll start out on the weekly, and I'll basically go through all the major pairs and a couple of exotic ones as well. So euro dollar here, what we can see, the 112.70 has been holding on to its support here. Not a lot going on, no clear signal on the weekly. Well, there we go. Let's see if the daily shows us something. Well, the daily doesn't show us too much either, other than we have a lower low. Now, buying from a lower low is not ideal because it's not confirmed. Selling into the lower high usually is a good plan, but with this extension in place, you would be selling at the lows. Now, who wants to sell at a cheap price? There's no way to know whether you'll be able to buy it back. So basically, what happens in these cases, we usually wait for confirmation on a higher low to confirm whether this is actually what's happening, whether there is a trend change to the upside in the form of a higher low, which could easily happen this way. So if the way I'm talking and it's a bit too speedy, feel free to leave any comments or anything about any questions you have. As I said, it is a quick rundown. This is usually a 40-minute, 1-hour process. We will have occasions when we will do the live webinar and the live Facebook, and when I'll be on, I'll be able to do this on a much more detailed manner. But just to give you guys a very good insight on how I do these things. So euro pound, moving on. Quickly, you can see that again, weekly made a lower low. There's not a lot going on. So as you glance at the chart, the first thing we can notice is that we could easily go for a lower high if we manage to reject the 88 level, which is the 50% retracement from the top, as well as the weekly 50 EMA. Until then, there's not much to do. Selling from the lower low is not a good idea. You would be selling at the lows. No one wants to sell that cheap. So moving on, pound dollar. Pound dollar, now interesting one here. We had a rally, we had a higher low, and we had a 50 EMA break to the upside. What can we do with that? Well, turns out not a lot, because it's still in the early stages. And yes, I will have to bring back fundamentals. It does eat away from our certainty and from the technicals working out. So while this is a bullish bias and it looks like a good trend change, when you look at the daily here, you can see that we could have easily had some nice trades on this one, but you can also see how these higher lows, while they confirmed based on 50 EMAs and 50% retracements, there weren't really clear candle patterns or even clear support to basically hold on to this one. So that's why I did not have any trades on this. Dollar Canadian, different story. Head and shoulders here. We've been looking at this for quite a while. Higher high on the weekly. So as soon as these higher highs occurred, I was looking for a pullback to the 133 level. I managed to have 1 day trade out of this, which we'll see in the trade reviews. Basically, still it's ranging. Market participants don't know what to do with this level, whether they want to hold it, whether they want to break it below. But for now, we are ranging between the 133.50 and the 132.90 basically. Everything is still there for us to buy into this, for any trader to look at it and say there's still evidence that this is going to go back. So there's still a reason to go long on this one. For instance, when we look at the 4 hour, and if you would have another support being held onto with a pin bar candle, then you could easily be able to go long on this one. So moving on, dollar yen. Dollar yen again, weekly, we managed to go up the 50 EMA, but we stayed put at the 112 resistance. And now we are literally between the 111 and the 112 resistance, which is never a good place to be. Basically resistance and a 50 EMA, because again a range could occur, and this is what we can see again happening. And this is, again, we are looking at dollar pairs mostly right now, which means that if the dollar is ranging from a bullish bias, you'll see that all of the pairs that it features, they have, although some of them will be able to put up a fight, usually a lot of them will just follow suit and they'll have the same or very similar price action. Aussie dollar, again, similar here. Lower high between the 72 and the 70 level, very mild triple bottom, but not enough for us to do anything with it. Daily doesn't look good at all. No candle patterns, nothing for us to do with it. So moving on, again, New Zealand dollar, very similar again to the dollar due to the range. So you can see again 80, 68, 60 and 69 really where's the resistance zone, and then at the 67 what we have is the support. So again, a range, not a lot we can do with that. We'll go into much more detail of how to trade ranges. I'm not a fan of them. They are unpredictable, and you need very clear support, very clear resistance hitting on the same spot multiple times. And again, when you're trading a range, there's no way to know whether traders, market participants will respect the range, or they will basically break out at the moment when you decide to take a trade on the other side. So that's why ranges are not my favorite, and you can probably see the narrative by now that what I'm really looking at is either trend change, as in a reversal in the trend, or a trend continuation. And none of these pairs, since we've been looking at them, have actually had a clear trend. Now we'll get to those as well, but unfortunately those right now do not feature the dollar. Now again, Aussie dollar, New Zealand dollar, a very good one here. Two exotic pairs, two commodity driven currencies. And usually we see the Australian prevailing in this one, but for a good while now, after this triangle, so you can see this triangle break to the downside, price was unable, the Aussie dollar was unable to actually put up a fight against the New Zealand. And now the New Zealand made a new low, so basically New Zealand strengthening against the Australian dollar. And again, we have some clear resistance at this point, and you can see I have an alert here for this pin bar and at the top of it, and that's the reason for that is because we could see a quick rally up to the 1060 before we do anything, which could have a nice 2-to-1, 3-to-1 trade from this support. So make no mistake, there's definitely support at this area, but it's not materializing as of yet. It's not showing us any clear signs of a break to the upside. It can happen at any moment, but for now, again, it's one of those pairs that you have to keep checking back and basically monitor it as the week goes by, which is why alerts come in handy, because as soon as you set a level to be alerted, as soon as something happens, you get an alert and you know that you have to check that pair. Now one pair that is different from the rest, and it features the US dollar, is this US dollar Swiss franc, and the reason for that is because we have what I meant previously with the range having very clear resistance zone as well as multiple bounces. So we can clearly see that that's the case here. So we still have a range on the longer time frames, but we have a bullish higher low scenario which was unable to break to the highs to make a new higher high multiple times. That's in 1, 2, 3, 4 times within the time span of almost a whole year. So that tells a story. That tells the story that market participants do not want to break this level to the upside, and they would much rather hold the resistance and possibly see a tumble from the top and sell from value. And that is the case, and this is why this has been on my list for the last 2 weeks. No candle pattern whatsoever to suggest a massive break, no pin bar, nothing very very apparent to the eye. However, in conjunction with multiple time frame analysis, once you're able to identify these patterns, you can easily see that this is a double top from resistance as well as a trend line with the 50 EMA. So really what I will be waiting on here is a break of the 50 EMA, not on the weekly, on the daily. The weekly is here for us to get a feel of the longer time frame horizon. Now on the daily, if you go down, you can already see that price action is breaking the 50 EMA, and it is trying to show those lower lows and lower highs. So what I have here is really the 1.0050 level, which is what I have as a alert. That means that whenever price goes up right here and it manages to form a lower high and it starts tumbling, and this can be a candle pattern, this can be a bearish engulfing, a bullish engulfing candle, any of the sort that is a candle pattern that suggests a lower high, I would be ready to look at this trade and take it to the lows. If you look on the 4-hour here, an even better representation is this one, right? So clear double tops on the 4-hour, no lower low yet, but with this extension not having any retraces in the last, let's see, 11th of March, in the last 2 weeks, 3 weeks now, what we can wait for is that these traders who sold at the top here, they will be looking to take profit. They will be looking to get out of their trades. Once they do that, they will attract more buyers. Buyers will buy this pair up to a certain level. Then the sellers will get spooked and they'll get out of their positions. Every time a seller sells their positions, they're actually buying it back up at a better price, right? So what they do, they inject more rally into this. This rally could actually go up to the 50 EMA or even higher and form a lower high. Once everyone agrees that the price is once again attractive enough to sell from, because now we are extended, so no one really wants to sell from this price. That's why you have these pin bar candles and indecision candles, because no one is able to put in too much liquidity to push prices lower. There's no reason to. Everyone is sort of waiting for the sellers to get out, for new buyers to be lured into buying the pair, even though you should be looking at a selling bias. And at that point, once the lower high happens, that's when the 1% or the 5% who know the direction of where the trades are going, they're going to look for a lower high, sorry, and then a lower low for a target. So that's that on the dollar Swiss franc. So that's again a good one. Despite having dollar in it, it shows clear some clear price action. Dollar and Chinese, again, this is a pair that I've traded probably no more than 5 times in the last 3 years, but when you do, you get these massive upsides and downsides. Actually, one of the trades that we discussed a good while back is this dollar against the Chinese yuan, and it was a buy from around this area. That's why I have these two here, and I actually took profit really early on, and I did not wait until we could see all that profit. And the reason for that was basically this pin bar candle. So I took profit on this one. By no means it was a very good profit taking area, and it had quite the confluence there. You can see here we had 1, 2, 3 resistance zones. So that sort of spooked me as a buyer, and that's why I got out, because this pair can be very volatile, and when you're sitting on around 5% profit, you do want to bank that in instead of letting it run or even risking it coming back to break even, not to mention a stop loss. So it's just better to take the money as soon as you're presented with it, and that's why, again, this was a really nice trade, but every so often you don't see these happening that much. So again, not a lot to do with this one as of right now. I would need to see a 6.85 retrace and a lower high in order to actually get into a trade on this one for a lower high. So moving on, one last dollar pair to look at is the dollar Singapore dollar. Again, this was something that I looked at for the last couple of weeks. Again, this is why, again, cannot emphasize enough multiple time frame analysis. What do you see on the weekly here? Well, you see that there's the 135 support, but it's not as apparent, it's not as eye-catching. Now, if you look on the daily here, you clearly see the inverted head and shoulders, you'll see the higher lows. And so when we started to show a bullish candle here, I had an alert in, which was a couple of weeks ago, which now I can safely say that we can drag further down, because if price does actually manage to reverse to the upside, we'll be able to buy from a better price than above that. Now, we are still below the 50 EMA, and we still don't have plenty of confirmation for a buy. But if we would have, let's say this candle would turn into a bullish engulfing by end of the day, then for instance we could look at a nice buy the following day. And that concludes our dollar denominated pairs. Now moving on to the euro Aussie. Not even going to spend too much time on these because they're all ranging at this point. So euro Aussie is ranging. If you have any questions regarding one, or if you have analysis on one of them and you want to get more clear on it, please feel free to either write or basically comment on this video. As well as Facebook. So Euro Canadian, I had here a alert for a possible downside movement, and that's based on this weekly weekly lower high with the pin bar candle and 50 EMA. Now what we have to again note that despite having a pin bar candle there, it's only reached 38% Fibonacci pullback and retraces out of the 50 or even 61. So while it can actually go into a lower high and a lower low, it still did not materialize, and it's still yet to happen. And besides, again, as you can see, we would not be selling from the lows, so we have plenty of room to move to the downside, with the next target possibly being around the 148. So all in all, not a bad setup, but it keeps failing week on week to actually show us a clear entry, and that's the case with the daily as well. So there you go. You can see this was literally a pin bar formation, that bullish candle paired the next day by the bearish candle, and since then it's massive indecision, which again is never a good sign to get into or out of a trade when you have these type of candles. Moving on, Euro New Zealand. Again, lower highs if you would sell. Again, why do I keep saying that you wouldn't want to sell at the lows? Well, what's the golden rule of trading? Buy the lows and sell the highs, right? So that's the golden rule. So selling, it's not selling the lows, buying the highs. So basically when you have this pair at the lows, you would not even consider selling because you're already at a cheap price, right? So you have to buy the lows, not sell the lows. So based on that, we do have a double bottom here, and that's really all that we do have, because otherwise it's been ranging and it's not really showing anything. Now, when would I get interested? Let's say a run up to the 167, a pullback to the 166, and this is where I would get in, right? So that's basically the main to go strategy, if you wish, that I always utilize. Catching the reversal on the second or the first leg. That's really the whole strategy and the whole approach that we use. And it's one of those things that I oversimplify it, but it takes experience to get into this, to identify the market in this manner. And you have traders who for years they've been trading all different kinds of sort of strategies without realizing that there's really only one strategy. It's catching the price reversing from a high to the low and from a low to the high. That's it. There's no magic formula. So moving on, Euro Yen here. Triangle formation. I had a sell on this one a good couple of weeks ago, then a buy, which was only the intraday trade, and now we are looking like we could go into a sell again, but again we have this indecision there. So the more you have indecision after a clear shaped candle, the more the sell-off becomes indecisive. It becomes something not to be too confident about, basically. So that's euro yen. I have the alert there, so if price tumbles below it, I will be looking at it once again, reassessing my analysis, reassessing the intradays, reassessing the weekly, and I will decide whether to get in or not at that point. Until that alert is not triggered, there's not much I can do with that. Moving on to the pound pairs now. Pound again, the pound rallied based on the fundamentals that we had on Brexit and also a couple of data points. But the idea is it rallied against the Aussie, it rallied against the Canadian, but it wasn't a clear shaped, clear cut rally. It was just a momentum which quickly faded, and then we went into this sort of range, sort of one bullish candle, one bearish, one bullish, one bearish, which again is never a good setup, never a good scenario you want to see in order to trade some really good positions. Pound yen, very similar on this one as well. We head up to the resistance of the 149, failed to do anything there, and price has just been sideways from that point. Pound New Zealand as well, you can see between these two. I'm just going to speed it up a bit because I've been going at it for quite a while now. So yeah, what else is there? Pound Swiss, again, not a lot to do there. So you can see how when something doesn't jump out at you from a technical perspective and it's not really ready within that week to become a possible trade, you can make a plan for it, to wait and to set yourself out saying, if price goes up here and does this is what I'd be looking for. That's great, but if it's nothing there, then it will not make your weekly list. Now, Aussie Canadian, again, a quite interesting one, which I actually sold into, and I had a trade on this one before it just went into, again, quite the indecision here. Canadian yen, a very good one, which again I had a trade on. And if you guys follow the newsletter and the weekly newsletter analysis and trade previews, you could easily see this, how I traded this from the trendline break down to the 82, and then basically waited for the for this to retrace above the 50 EMA. And once again, if we manage to have a drop on this one and to have a tumble, I'll be looking to sell further, because what we can see now is a lower high. That's clear as the sky, and you can see how we also have bearish momentum coming back into the market. So again, a very good one here that I actually have no clue why I don't have an alert on, but let's just put an alert there right now. So we have the alert, and it's good to go. Aussie yen, very similar. Again, you can see that there's a range. You can see that the range is 79. You can see the 77. But there is something within that range. There is a clear deceleration. There is some formation, some structure, which a lot of the euro and dollar and even pound pairs are lacking right now. New Zealand yen, again, quite a controversial one. Pin bars and doji candles flying every day now and again. Not entry ready for sure. New Zealand Canadian, I don't even have lies on this one because I think it's been quite a while since I traded it. So the point is not to really trade these pairs every week or every month. It's not a must. It's having all the currencies in your basket so you can identify the possibilities on whichever it appears first. That's really the idea. So you can see that's why I said it takes around a good hour to go through these in a much more relaxed setting and to see what is actually shaping up for the next week. But this is a really good comprehensive way of you to see how to basically go through all the pairs and identify what's what. So for instance, what we can identify on this one is we do have a lower high. You can see it right here. That's a lower high from a new low, 50 EMA. That's the daily. Let's see how the weekly is shaping up. Wow, there you go. So weekly has a lower high as well. It's been coming from a trend line, and what it did, fall below the 50 EMA, and it actually managed to retrace some of it, but then it was pulled back again. So usually the most likely scenario from here is for another tumble to the downside. And to time that, really, that's why we are looking at the daily, and we're looking at the intraday as well. So again, if this tumbles further, then we can look for a possible sell-off as well. And so 74, 75 level is where I want my alert to be. That doesn't mean that just because I have an alert it'll be a trade. What it means that I'll reassess at that point what else is looking good, what else am I in, because I might be in another trade by that point, which means that I might not take this one. But the point is, have it in your watch list and sort of develop the habit of looking at these reoccurring price action formations. So as soon as you spot something on one of the charts, right, that looks decent for a possible trade, you revisit that. And with revisiting it, whether it works out or not, whether you take the trade or not, by revisiting and seeing how price action unfolds, you train your eye to actually see how price action unfolds on the setups that you deemed worthy of your time. So as soon as you do that, again, the amount of compounding attention that you point to these pairs and the way the price action unfolds and you train your eye, over time it'll accumulate so much that, as I said, right now, as you can see, you'll be able to go through or go to the whole pair, all of the pairs in like 40 minutes, and you would be able to clearly see what jumps out at you, and if there's an opportunity, you would be there or not. And that's really why this is necessary for the watch list. Swiss yen, again, a really nice one here. What I don't like is this, that lower high doesn't have a lot of resistance. It does have some. It has deceleration, and so I'll be looking for a possible sell-off in this one as well. It is a bit controversial because on the weekly we don't have a lower high, and if anything we have a higher low, which suggests a possible bullish outcome. So again, on the fence with this one, but I do have an alert there, as you can see, which I can actually move around the 50 EMA now and wait if we can actually see a 50 EMA break on this one. New Zealand Swiss, and again, not a lot there. And Aussie Swiss, again, not too much to look forward to. And now that brings us to a pair that I have it because it was one of the last pairs I added to my watch list and to my overall watch list that I'm doing every week, is the euro against the Swedish currency, the Swedish krona. So again, very rarely I have a trade on this one, but when I do, it is working out quite nicely. So what we can see on the weekly is a trend line, a triple top from the 1060 level, as well as a bearish engulfing candle. Now this is a very good setup to look at and to trade, possibly, if it shows us what we need to see. You can see my alert is there. This could easily go into a range from here on out and just range between these two levels. However, what I'm looking for is for this to continue, for this sell-off to continue. And if you look on the daily here, what we could see is if price goes up to that alert there, the 1050 level, we would have a lower high based on the breakout zones. That's where the breakout occurred. The 1050 level was where price was holding for 1, 2, 3, 4 times there, once as resistance, 2 times as support. So as soon as it broke below, that becomes the line in the sand, that becomes the price to look for in case price retraces, confirms further for a new leg down, also confirming a possible downtrend and a full-on reversal from this uptrend. So if that's something that again happens, then this is what I'll be looking for. And I know you are possibly looking at these and saying, well, you have 2 pin bar candles there, why do you not take that into consideration? Again, I have to remind you that pin bar candles and every type of technical signal, they are used in conjunction with each other. You should never use them as a standalone signal. So these don't point to anything. All they are showing is that buyers wanted to buy the market back and they rejected that price. There's no support, there's no lower high. There is some EMA from the from below, but really in order for us to deem it as a signal, it would have had to been the other way around. So it's really in a no man's land at this point, these 2 candles, and they're not really showing a clear price action of what is about to happen. They are showing pressure, but it's not enough for us to sell from this price, because remember, this is the weekly and the daily, and we are at the lows. So we're on the lows on the daily. Ideally what we want is a better price so we can take that next lower low as a target. Not even going to go into the dollar Turkish one. Not even going to go into that, that's too advanced. And yeah, that's basically how I do my my technical rundown. Yes, it's a bit more slow, and yes, I do take notes, and I encourage you to add all of these pairs that you've seen in this video, add them to your watch list, add them to your list that you're watching, and really go through them once a week, identify a couple of things, note it down, and then see how that develops over the next 1 or 2 weeks. And then reassess, and so on and so forth, until it becomes a habit that you do this at the end of every week. And that is basically concludes our weekly outlook. And let me know if you have any questions and if you like this fast-paced way of basically going through all the pairs here. Cheers for now, and I see you on the next one.